So we got a report about the state of the African markets in 2017. Of course, we did a bit of our own decent share of the equities and debt markets in 2017. 3 Nigerian banks raised a record $1.4 billion, the largest on the African continent in corporate Eurobond. Then on the rights issue, we raised close to $500 million as well. But at the IPOs market, we're still lackluster there since the Transcorp IPO in January of 2015. So we've got to put a bit of this into some context, putting Nigeria at the center of the African markets. Omotola Abimbola, one of the investment analysts from Afrinvest, is live here in the studios with us to take us through some of this. Good morning. It's good to have you. Thank you very much. It's been a very decent week. When you look at reports like this about the state of the markets in Africa and where Nigeria actually comes in here, what does it tell you really about how we're positioned with the rest of the continent?
I think for Nigeria, particularly looking at the reports in terms of the activities in the debt and equity capital market in 2017, you will see that we saw an increase in the volume of rights issue transactions in the market, primarily because most of the companies listed in the markets, they had their balance sheets significantly impaired by the FX depreciation that occurred between 2014 and 2016. So 2017 was the year for most of them to come back to the market to try to deleverage their balance sheets by raising equity capital from their existing shareholders. However, and more importantly, the IPO market is still very, very cool. We haven't seen a major IPO in the market since we had Seplat, listed in 2014. Transcorp listed in January 2015, but that's essentially a small cap company. So we haven't seen a really large cap company come to the market to list since the Seplat listing in 2014. And that reflects two things. Number one is the macroeconomic challenges the country is facing. Typically, for most companies coming out to list, they need to watch the market sentiment and ensure that the market environment is very, suitable for them to list. And the market environment in an economy such as this is determined a lot by macroeconomic stability. Looking at the FX markets, whether foreign investors are willing to stake, their money into the market. So because of the FX depreciation and the uncertainty regarding the FX policy between 2014 and 2016, the market wasn't really suitable for most companies to come out to list. And there's also another question of whether we are even raising enough winners in the local economy. Because
in terms of companies
that are willing.
So just a second to cut in there. I respectfully did that. Give us IPO 1.0 here. Okay. In terms of when we say an IPO and a company is willing to go to the market. And yesterday, the news out that Egypt stock market is looking at least about 7 IPOs. If you talk about the Chinese, they come in hundreds. On a yearly basis, and the SEC just gets overwhelmed with approval of IPOs. So when we say an IPO in the Nigerian market, and you're talking about what does it really mean if I'm coming out and I'm doing an IPO?
It means two things. It means, number one, you have solid corporate governance, because for you to come out to the market to list, you have to go through several regulatory processes to ensure that you are adhering with best-in-class corporate governance rules. And it means you also have a very solid and sustainable business model, because no investor, either domestic or foreign, will put their capital into your company, except if you have the right business model.
So I'm selling shares.
You are selling shares.
And I'm telling the public.
We are promising some returns, which will be dependent on your business model. So that's why I say that looking at the IPO markets in Nigeria, the market has been, affected by two major things. The kind of macroeconomic environment we are operating in, which has been very volatile in the last 6-7 years, as well as the nature and the stability of the companies we have in the country. We are not raising enough winners, who have the right corporate governance structure and who have the right, business model.
So despite our very nice and decent GDPs of the last 7 years, if you exclude the last 2-3 years or so, and with oil prices at very nice level and with consistent democratic governance, we're still not building the kind of confidence of companies that can undress in public, as it were. That's what an IPO means.
We do not. And indeed, if you look at the IPO market, before the burst of the 2008-2007, financial markets bubble, you will notice that most of the companies that came out to list then are non-existent today. because number one, they didn't have the right corporate governance structure and they had no risk management framework. And those that are surviving today, if you look at their share price performance, it's been very poor. They've been mainly moribund. So a question needs to be asked.
You're telling me.
A question needs to be
folks asking
asked.
a lot of questions, Wilson. You guys were there you were there, Wilson, when the market was, and you told us we should buy into the stock market. Now they're looking at those stocks as penny. And I got one of them in the newsroom. He keeps reminding me every day he gets into the office. I'm not going to name names, but yesterday he's still asking me if anyone is willing to take off those shares and just give him whatever they are worth. So the IPO market and listings, if we look at other jurisdictions, look at Nigeria, boils down to the macroeconomic environment.
Correct. Perhaps, maybe in a way, if you look at the IPO markets in general as well, all over the world, I think it has cooled significantly, compared to the very good days of 2007, 2008. If you look at both developed markets and even the regional markets here in Africa, we haven't seen the level of listings that we saw then, and that perhaps reflects the fact that sentiment is now, a bit more, investors are now a bit more cautious, when trying to invest in new companies. And then for Nigeria, the macroeconomic environment that we keep repeating is a very primary factor.
And you also talked about corporate governance. So that speaks to the regulatory side of things.
But interestingly, like I mentioned initially, the rights issue market, has been quite robust. In 2017,
that's for existing companies. So six companies last, according to this PwC report, 6 already listed companies on the stock exchange raised nearly $500 million US dollars.
Correct. We had a number of companies within the consumer goods sector, Unilever, Flour Mill. We have some in the industrial goods sector, Lafarge, WAPCO. We had the conglomerates, USAN, and we also had a bank. Union Bank, who all came out to issue rights in the market in 2017. And the primary motive for them to do this wasn't to expand their capacity. Typically, when you are raising capital, you are doing it for either of two reasons: either to expand your capacity to increase your market share, or take advantage of some improvements in the economy, or number two, for you to do a bit of restructuring, of your capital structure, of your balance sheet. But the primary motive for all the rights issue transactions we saw in 2017 was because most companies were coming out to raise capital in order to restructure their balance sheets, which was significantly impaired, by the macroeconomic, volatility between 2014 and 2015.
So if I look at the rights offer market on my right hand and an IPO on the left, and IPO means new offerings.
Correct.
You're just coming into the market. Right issue is that this company is already existing. It's already on the stock exchange. It's a brand name. I can see the products. Perhaps I use them. I eat, drink, or whatever, this product. So I can tell. So the right offer market, yes.
Yes.
But the IPO, no. So which tends to speak to what you said about whether investors are still a lot wary about new entrants into the market, but more confident in those who are already existing.
Yeah, you're 100% correct. The investors are wary, and regulators are also a bit more careful now in approving, new IPOs. And the economy in general as well, it has not produced enough, enough winners, enough local winners, who have the, corporate governance, track record, and who have, very solid business model, that can generate significant investor interest in the equity they are offering to the market. But going forward, the interesting thing is that the outlook is a bit more brighter now. In 2018, we are looking forward to MCN's IPO, although they had to be prodded by regulators, who, in a way, try to force them to list. But it will be a very big transaction if, according to the information out there, they are planning to raise about $500 million, in the equity market, and with a valuation of over $3 trillion, that could potentially take the market cap of the Nigerian equity markets very close to $19 trillion before the year ends. So that would be a major listing to look out for.
What exactly does the company gain by listing, selling old shares or selling new shares via an IPO in the market? What exactly? Why do you list?
You could list in order to raise capital. Maybe you need the capital to probably, expand your infrastructure, to probably spend in research and development or in advertising. And it could also lead to even get more customers to be aware of your name, to ensure more customer loyalty. If a company like MTN Nigeria, which has been part of Nigeria's growth story in the last 2 or 3 decades, comes out to list, you are very sure that they will generate significant interest from both the retail and the institutional investors, and it's going to deepen their brand awareness in the market as well.
So that takes us to this conversation about, let's move a little bit to the debt side because of time. On the debt side, we saw 3 Nigerian banks, Zenith, UBA, and Fidelity, raised a record $1.4 billion, and that's the largest combined on Nigerian market across African continent. That's a good one.
It was a good one. The debt market was quite interesting last year, although if you look at the structure of the transactions that occurred last year, we didn't really have enough of local currency bond issuances because of the elevated interest rate environment and the fact that the federal government was practically crowding out everyone in the local market.
Now, you don't want to do local currency last year.
You don't want to.
You don't want to get in the middle of 20%?
Yields were quite high, and there is a duration.
Only few state governments were able. Only Lagos State, I guess, was able to be doing anything. If you get into that, you're going to get crushed.
Yeah, definitely.
So our banks went overseas.
They went overseas, where the appetite is quite high, because for most foreign investors, if you're looking at yields in their local markets, they are quite low, so there is this very strong, push sentiment, which has led to heightened demand for emerging and frontier market Eurobonds, where yields are a lot more higher. And for the banks that went out to list, they also took advantage of the fact that the economy was coming out of a recession, and we were witnessing improved macroeconomic stability. Last year was a year of recovery for the economy. We went from a negative growth to a positive growth. Current account balance stabilized, and the central bank increased their level of intervention in the foreign exchange market, which stabilized the naira and also improved, the sentiment and the confidence foreign investors had in the Nigerian market. So these Nigerian banks went out to take advantage of that, and we saw Zenith Bank, they reached $100 million at a yield of around 7.4%, which was not so far off from the yield that the federal government even raised.
The sovereign Eurobond.
The sovereign Eurobond that we had in Q1 2017. We also had Fidelity. They issued $400 million, although at a very high yield of around 10.3%, to reflect the credit rating of the bank. UBA also made their debut in the Eurobond market, raising $500 million in the market. So in total, we raised $1.4 billion. And if you also take into consideration the amounts raised by the federal government, in Q1 we raised $1.5 billion, and we also had a diaspora bond issuance in
$300 million,
later in the year. So that took it to around $1.8 billion raised by the federal government. So if you had this to what the corporates raised, Nigeria's sovereign and corporate raised over $3 billion in the Eurobond market alone
last year.
Which was quite interesting.
I think we can have a handshake to that. It tells a lot about the macroeconomic environment and the interest.
The appetite is there for foreign investors.
But where appetite is there is that folks are also waiting on the wings that we might just rev up privatization. That's why we're finishing this conversation and get some listings. Gone are the days of the TCPC, where the First Bank, the UBA, the old Union Bank, privatization were done. Then we got a second phase. Then we got a few other aid. But we haven't seen anything on the privatization side.
We have seen a bit, although the major issue is that the newly privatized companies, do not have the business model necessary for them to come to the market to list. In the last decade, it was an era of privatization, and it was very successful.
I can see them in the market.
The biggest companies, that are in the market today, like BCC, like Ashaka Cements, like Ohando, like
Nigerians are looking for the fertilizer company in Delta State, for example.
LMA.
Yes, they're looking for the LMA Petrochemical. They're looking for the Gencos and the Discos in the market.
Exactly. Now, in the current decade, we have seen a bit of privatization, particularly of the PHC and legacy assets, the Gencos and the Discos. But the problem is that these companies currently, their business model is not solid enough for them to come to the market to raise capital, because they are being hindered by lack of structural reforms to liberalize the power market, to ensure that the pricing of tariff in the market is more cost reflexive, that would probably, lead to them to record better earnings and will prompt investors to invest in them when they come out to list in the market. But essentially, there are still a number of privatization that could be done that could, in the long term, benefit the capital market.
Let's continue this conversation from here next time. You heard about the new land use charge in Lagos State?
I did.
You do? Okay, you need to listen to this conversation with Taiwo Oyedele, the head of tax and regulatory services at PwC. He's coming up next to discuss why Ambode wants his money right now on the table.